You are running out of time to build real wealth, and you do not even realize it. Right now, as you start another January, the wealthy are executing 7 specific money habits that separate them from everyone else, permanently. Here is the brutal truth. According to Motley Fool research from December 2025, only 27% of people actually stick to their financial resolutions. The other 73% start strong, then quietly abandon everything by March. But millionaires do something completely different. They do not make resolutions, they execute proven systems every single January, without fail. And habit number 4 is the one almost everyone skips because it feels too simple to matter. That single habit is responsible for more wealth creation than any investment strategy ever designed. If you are serious about changing your financial future this year, the next 15 minutes could be the most valuable time you spend all month. What separates wealthy people from everyone else is not luck or inheritance. According to a Ramsey Solutions study of 10,000 millionaires, 79% did not receive any inheritance at all. They built their wealth through consistent habits executed year after year. The same study found that 80% invested in their company 401k plan, and 75% said regular, consistent investing was the primary driver of their success. These are not extraordinary people with extraordinary opportunities. They are ordinary people with extraordinary discipline who refuse to skip the fundamentals every January. Before we dive deeper, hit like and subscribe so you never miss our videos, and share this with someone who needs to see it. Here is what millionaires understand that most people miss. January is not just another month on the calendar. It is a strategic reset point that combines over decades. The habits you lock in during the first 30 days of each year determine where you stand financially 12 months from now. Get this wrong and you will spend another year wondering why nothing changes. Get this right and you join the small percentage who actually build lasting wealth. 1. The annual wealth audit. Every January, millionaires conduct a complete financial inventory before making a single decision about the year ahead. They pull every account statement, review every investment balance, and calculate their exact net worth down to the dollar. This is not casual number checking. This is strategic intelligence gathering. But here is where it gets interesting. According to the Money Guy 2025 client survey, wealthy individuals do not just look at their numbers. They compare this January to last January. They track the exact percentage their net worth increased or decreased. They identify which accounts performed and which ones underperformed. They know exactly where every dollar went and where every dollar came from. Most people have no idea what their net worth actually is. They have vague feelings about their financial situation, but no concrete data. Millionaires treat their personal finances like a business because that is exactly what building wealth requires: precision, measurement, accountability. The audit takes about 2 hours if you do it right. Pull every bank statement, pull every investment account, pull every debt balance, calculate your total assets, subtract your total liabilities. That number is your starting point. Write it down. You will compare against it next January. 2. The investment ceiling reset. Every January, contribution limits reset. This is not a small detail. This is a massive wealth-building opportunity that most people completely waste. According to IRS Notice 2025-67, the 401k contribution limit for 2026 is $24,500. That is up from $23,500 in 2025. The IRA limit increases to $7,500 from $7,000. If you are 50 or older, the catch-up contribution rises to $8,000. And if you are between 60 and 63 years old, you can now contribute an additional $11,250 through the Secure 2.0 Super Catch-up provision. Here's what millionaires do differently. They do not wait until December to figure out their contribution strategy. They calculate their maximum contribution on January 1st and immediately adjust their payroll deductions to hit that ceiling. The Ramsey study found that 80% of millionaires invest consistently in their 401k. They do not time the market. They do not wait for the right moment. They maximize their tax-advantaged accounts from day one of every year. You want to know the math that changes everything? If you contribute $24,500 in January, instead of spreading it across 12 months, and the market returns 8% annually, that January contribution earns roughly 8% more than a December contribution of the same amount. Over 30 years, that timing difference alone could mean hundreds of thousands of additional dollars in your retirement account. 3. The automated wealth system. Millionaires understand a fundamental truth about human psychology. Willpower fails. Systems succeed. Every January, they review and optimize their automated money systems to remove human decision-making from wealth building entirely. The Fidelity 2024 Financial Resolutions Study found that 28% of people who successfully kept their financial resolutions credited creating clear and specific systems. But here is what most people miss. Automation is not just about convenience. It is about removing the possibility of failure. Here's exactly what the automated wealth system looks like. On January 2nd, the day after New Year, millionaires verify that their retirement contributions are set to the new maximum limits. They confirm automatic transfers to investment accounts are scheduled for the day after each paycheck hits. They ensure emergency fund contributions happen before any discretionary spending is possible. They set up automatic bill payments to eliminate late fees and protect their credit scores. The goal is simple. By January 15th, every dollar should know exactly where it is going before you ever see it in your checking account. This next habit is exactly where most people quietly sabotage their financial future. If you are serious about building real wealth, you need more than motivation. You need a proven blueprint. The VYBO Wealth Blueprint breaks down the exact frameworks millionaires use to build lasting financial freedom. These are not theories. These are tested systems, backed by research and real results. Check the description below to access the complete blueprint and start executing like the wealthy actually do. 4. The written goal declaration. This is the habit most people skip, and it might be the most important one on this entire list. Writing your financial goals on paper sounds too simple, too basic, too elementary to actually matter. But the research tells a completely different story. Tom Corley spent 5 years studying the daily habits of 233 wealthy individuals and 128 people living in poverty. His findings were published in Rich Habits, and the data is undeniable. 80% of self-made millionaires set specific long-term goals and focus on them daily. Not vague intentions, not mental notes. Written, specific, measurable goals they review every single day. But here is the part that should stop you in your tracks. Among the people living in poverty in the same study, only 12% set goals of any kind. That is a 68 percentage point difference between wealthy people and those struggling financially. The habit of writing goals is so strongly correlated with wealth that ignoring it is essentially choosing to stay stuck. Now, we have covered the first 4 habits. This is the halfway point. Everything from here forward builds on what you have just learned and takes your wealth building system to the next level. Why does writing goals matter so much? Because clarity creates action. When you write that you will save $50,000 this year, your brain starts identifying opportunities to make that happen. When you leave it as a vague desire to save more money, your brain has nothing specific to work toward. Millionaires do not just think about their goals. They write them down, post them somewhere visible, and review them every single morning. This is not motivation. This is programming your brain to find solutions. So what does an effective goal declaration look like? It is not saying, I want to be richer. It is writing, I will increase my net worth from $400,000 to $500,000 by December 31st, 2026 by maxing my 401k, saving an additional $500 monthly into my brokerage account, and eliminating $3,000 of unnecessary annual expenses. Specific, measurable, time-bound, actionable. This is what millionaires write down every January, while everyone else makes vague resolutions they forget by February. 5. The income stream inventory. Wealthy people do not rely on a single source of income. They build multiple streams that work independently to grow their net worth. The Rich Habits Study found that 65% of self-made millionaires have at least 3 income streams. 45% have 4 income streams. 29% have 5 or more streams. This is not a coincidence. Multiple income streams provide stability when one source falters and acceleration when everything works together. Every January, millionaires inventory their income sources and ask critical questions. Is each stream still growing, or has it plateaued? Which stream has the highest return on time invested? Which stream could be automated or delegated? What new stream could be developed this year? The goal is not to work more hours. The goal is to have more sources producing income, whether you are actively working or not. This might mean dividend investments, rental income, side business revenue, royalties, or any number of passive income sources that continue generating money while you sleep. 6. The expense purge protocol. This is where millionaires separate themselves from everyone who just talks about building wealth. Every January, they conduct an aggressive expense audit and eliminate everything that does not actively serve their wealth-building goals. Research consistently shows that 94% of millionaires live below their means. 75% never carry credit card debt. They are not cheap, they are strategic. There is a massive difference. Living below your means does not mean suffering. It means directing resources toward assets instead of liabilities. The expense purge works like this. Pull up every subscription, every recurring charge, every automatic payment. Ask one question about each expense. Did this directly contribute to my wealth, health, or genuine happiness in the past 90 days? If the answer is no, cancel it immediately. Do not negotiate. Do not save it for later. Cancel it. Most people discover they are paying for streaming services they never watch, gym memberships they never use, software subscriptions they forgot existed, and premium services that could be replaced with free alternatives. The average person wastes thousands of dollars annually on these forgotten expenses. Millionaires do not tolerate waste. Every January, they cut the fat and redirect those dollars toward investments. If you are finding value in this content, consider joining our channel membership. Members get exclusive access to extended breakdowns, wealth-building frameworks, and a community of people executing these exact strategies. The link is in the description. This is for people who are serious about taking action, not just consuming content. 7. The learning investment. Tom Corley's 5-year study revealed one of the most powerful habits separating wealthy people from everyone else. 88% of millionaires dedicate at least 30 minutes daily to self-education. They read books on personal development, business strategy, and industry trends. They listen to podcasts that expand their thinking. They take courses that build new skills. In contrast, 77% of those in poverty spend more than an hour daily on entertainment activities like streaming, social media, and gaming. That is not a judgment. That is data showing where attention flows and how it correlates with financial outcomes. Every January, millionaires plan their learning for the entire year. They identify 3 to 5 books they will read. They select podcasts aligned with their goals. They schedule time for learning just like they schedule time for meetings. Education is not optional. It is a non-negotiable investment in their most valuable asset, their own mind. Here is the practical application. Block 30 minutes every morning before you check email or social media. Use that time exclusively for learning something that advances your financial knowledge or professional skills. Protect this time like you would protect a meeting with your most important client, because in a very real sense, you are meeting with your most important asset, yourself. You now have the 7 habits millionaires execute every January: the annual wealth audit, the investment ceiling reset, the automated wealth system, the written goal declaration that most people skip, the income stream inventory, the expense purge protocol, the learning investment. The data from 10,000 millionaires proves these work. The question is whether you will execute them this January or let another year pass unchanged. Your move. Make it count.